Hello, everybody. Another fucking shitty week. I'm getting kind of sick of this. No, last week was good, but this week back to bad. So, with that, I put on my big man pants and I come out here to tell you what I'm doing because I think there's still some really good stuff you can do here right now. And that's just how this works. The market keeps trading and I still own stock, so I have to keep moving ahead. Before I get into NCR and LGF, let me talk very briefly about Magnachip because I realized I didn't talk about it since they put out a buyback on Monday or Tuesday. I don't even know what day it was. They increased the buyback from 37.5 million to 50 million, and they said they entered into a 10B plan. This basically means that no sale, of course, in the near term. They can't enter into a 10B plan with material inside information, though I guess the 10B plan could start repurchasing stock months from now. In theory, they would be it would be incompliant because they're not buying anything while they're still negotiating. But of course, it's very likely that the LX deal is currently dead, and that's fine. If they actually buy back stock here, which they will, I'm very convinced that they will be active purchasers. They could take in 4 to 5 million shares at this price level, and it would probably take about 4 months to finish off that buyback, given the volume it's trading. So for once, I don't have to be upset when it goes down or if it stays down here, because I know that I'm accreting value with the buyback. Before, when they had no active buyback in place, there was no way to benefit from the stock going down except for me buying more, and I can't buy anymore. I'm truly maxed out now. It's something like a 60-something% equity position for me. So yeah, I'm done. I'm done adding to Magnachip, unless something else good happens in my portfolio, which doesn't seem to happen anymore. NCR process broke. Couldn't get financing. I had a 9% equity position going into this, and I don't know, 150 basis points in options left. Obviously, the options are wiped out. I already lost a bunch on the options before, hundreds of basis points. And I tripled the position today in equity. So it's now a 25% common position with no options. I think NCR is extremely interesting here. So first, I'll answer Jeremy's question. So what's holding up the financing and what's that all about? So the mistake I made with NCR is that there has not been any LBOs really this summer, right? And I mean, there's been none. So it'd be one thing if we were seeing LBOs get done and we know they're in a process, NCR, and we know they're looking for financing. They've been looking for financing since July. And it was very clear that they were having a hard time finding financing. And it's not, Jeremy, to answer your question, it's not NCR specific. There's just no funding for new issue LBOs. There's been some LBOs on the software side done with something called direct lending, which is basically like buy-side firms, Apollo, and really large buy-side institutions. They're bypassing the banks, and they lend directly to the sponsors, the private equity firms. But even in those scenarios, the leverage is much lower as a percentage of equity and debt over the overall deal. If you look at like Zendesk, for instance, Zendesk, I don't even remember the exact numbers, honestly, but it's a $9.5 billion acquisition. And I think they're only borrowing like 2 billion or 2.5 billion. So 7 billion equity, 2.5 billion debt. And the other ones are the same thing, a much lower amount of debt versus the overall deal. NCR is already pretty levered. So this is a true LBO. You need to be able to have the functioning capital markets to be able to issue this much debt. Rising interest rate environment is definitely an issue because the debt is getting more expensive. No question about it. The part that makes it very interesting, though, so let's say now NCR's LBO would be like 300 basis points more to finance it than it would have, 6 months ago, which is probably about right. All that really means is if NCR was worth $45, 6 months ago, maybe today it's worth $40. in a takeout. You have to pay a little less, and you could still finance it at the higher interest rates. What is so fascinating about NCR is that the private equity firms that were going to acquire NCR were going to split the business up. And that was how they were going to make their 20+% return on their investment at $40 to $45. I believe the takeout price would have been somewhere between $40 and $45 if Veritas would have gotten the financing. And to repeat, they were going to pay 40 to 45, and then they were going to get a 20% IRR. Sometimes you can't look at that from a public market standpoint because they're putting so much debt on the new entity that it gives a huge juice to their stub equity return, which is the equity that they put up for the LBO. But in this situation, because there's so much debt on the public vehicle, the incremental debt they were going to put on is probably pretty low versus just refinancing the debt that it already has. So we're getting the benefit of leverage by owning NCR Common. Now, why didn't the company just sell one of the divisions to create the value like the private equity firms will do? And the answer to that is taxes. The only way you can get a tax free or sale is if you spin off the division. And then 24 months later, you could then sell the division, or you could do it earlier if you've never shopped the divisions. That is not the optimal way for NCR to proceed, right? They don't want to wait till the end of 2023 to spin this off. And they definitely don't want to have to wait 24 months after that to have it be sold. Now, buy new, it's going to create value between now and then. So it'll be worth more than it's worth today. But that's not what they wanted to do. They wanted to sell the whole company, and they weren't able to. And we could say with high confidence, it wasn't because the business deteriorated. This isn't Kohl's. This isn't Kohl's going through a major negative secular, disaster headwind kind of environment. And both of these businesses, it had bad earnings back in May, but the earnings in July were solid, and they were totally in line with expectations. So the way I look at it is, and so if you go to the presentation they put out this morning, they highlight, I knew this even before I even saw the presentation, they highlight on the first page of the presentation and the last page of the presentation, they are open to selling the whole company at any point up until the spin. And they want to sell the company, basically, they say, whatever maximizes shareholder value. And they have an activist on the board. This is very different than Kohl's, right? This is a management team and a board that wants to sell the company. So you look at the stock today, and it's $22.50, and it's going to do like over $3 a share in earnings next year, and like mid twos this year, I think. And you have a setup where I think there is a better than not chance it sells for over $35 sometime before the end of 2023, and as much as $45. And the only way that will happen is when you have markets normalize and you have financing rates normalize. You're going to have to get the Fed cycle paused, at least, to where they're not raising interest rates anymore. You can have some sort of stability in long-term interest rates, and then you could start seeing LBOs happen again. What Dan says here is true. The combination of rates where they are plus an inverted curve make LBOs almost impossible, especially with the economy slowing. It's all true. So this, I think, massively overshot where it should be right now. So I assumed this would be down 10% today, last night. And for it to be down 22%, it was down 25% at one point. I know it's a bad tape, but I mean, your setup here is basically in the worst outcome, they're going to spin these two things apart. Okay. And it's without question that the sums are greater than the whole. Again, this is what the private equity firms are going to do. So, without having to even do a sum of the parts on the two, I'll take my chances with where this is trading going into the spin if we get there. But we're not going to get there. Okay. What they did today was pretty smart, actually. instead of just waiting for months and months and months to see if Veritas can get financing, which they probably can't, they ended the process. They put in place a plan B, which is getting started with a spinoff. It's going to take 15 months to do the spinoff, or a year to 15 months. You might as well get it going. The work you do on the spinoff also makes it more attractive to private equity, because private equity then has two divisions already carved out where they can then it'd be easier for them to sell a division when the time comes. Perry, that's a great question. I do not like that they did not update earnings, but to me, it seems rather odd if they were going to blow up this late in the quarter. I would think they would have warned and given us an update. I could be wrong, but that to me would be, you want to kind of kitchen sink it all at the same time. Bad news about no sale, and this is what our numbers are. I think it's kind of like a derelict of fiduciary duty if they announce this news and they don't tell you that their numbers are going to be shit. And their numbers, I would be much more worried, Perry, if they didn't already lower numbers back in May and then hit them in July. So I'm not terribly concerned about it, but it was the first thing I noticed yesterday, that they did not talk about earnings for this quarter. And it's a real risk. It's definitely a real risk. But the stock's $22. I mean, if you look at what it's done, even it's almost back to COVID levels. And it's just crazy to me. So I'm not saying that I'm completely comfortable with what the quarter is going to look like, but it's definitely the biggest risk in buying it today, is that they blow the quarter. It's a great question. So how do I think it plays out? Well, actually, I'll tell you what, Perry. If the quarter's bad, I don't think all of a sudden this doesn't become an attractive LBO for private equity. This is not like Kohl's, like I said. This is a very different kind of, these two businesses are very different. All that would do, in my opinion, would be reset the price expectations. And it's $22.50. So are they going to sell the company at 32 versus 42? You'd have huge upside to 32 from 22.50. I don't think the company would sell itself at 32. I think Engaged has an average price probably of like 40 in this, and I'd be surprised. But he has to exit too at some point, so they'll do whatever they think is the best IRR for their LPs. You have an activist who all they do is activist investing on the board, and very much involved in every decision that happens here. Yeah, I think I covered pretty much everything there. So not a good situation, but did not expect it to go down this much. So I feel like I'm given an opportunity here that I didn't ever think I would get. Someone on Twitter asked me if I was thesis drifting. I hope I explained well why I'm not. I very much often, will blow out of a stock if it doesn't hit my catalyst, which I did with SGEN, which I'm going to discuss in a second. My options all expire today in SGEN, and I'm moving on. It's if Merck ends up buying them, that's great. I don't have any confidence that Merck is going to end up buying them in the next 6 months, a year, 2 years. I have no interest in owning SGEN at all, and there's just no play there for me. So I just move on. I don't see that the case with NCR. Now, if NCR was 26, I wouldn't be this big in it. But, I bought it at 22.20. So 22.20 to 26 is a big move. And 26, I would just be kind of neutral. 26, 27. It shouldn't be this low. It should not be this low. It's a messy transition between ARBs and whatever, buy and hold people. And I'm pleasantly surprised the way it's trading. The first hour of trading, it was trading just awful. And it's so hard to time these things when the right time is to buy, because you just never know if day 2 is going to be worse than day 1, if hour 2 is going to be worse than hour 1. It's so messy, the transition in a break. And Zendesk went down like 2 weeks in a row every day, I think, basically, after they announced there was no sale. But the difference between Zendesk and this has a valuation support. Zendesk was just a high multiple SaaS company that, is just trading on takeout multiples of revenue. This has sales, cash flow, whatever. I just looked up, by the way, and they have an active buyback in place. They probably can't buy back anything now, of course, because they're restricted for earnings. But if the stock was this low after earnings, I wouldn't be surprised at all to see them be active on their buyback, which is ridiculously accretive. If you're going to sell yourself for $40, you can buy back stock at $23. So that would be another catalyst, I would think, that they would look to do. Okay. Any other questions on NCR? Let's talk LGF. So I made LGF huge. Though it's as big as NCR, I guess. It's like probably like a 25% equity position. And I also have another 10% delta adjusted in options. LGF's my last pre-arb I have in the portfolio. Pre-deal I have in my portfolio. Importantly, LGF is not going to sell the whole company. This is not an LBO. They're going to sell stakes in one or both of their divisions, probably 10 to 20%. And there'll be a mix of strategic and possibly financial, and it will require little or no debt to fund either of those. So your risk with LGF from a financing perspective is near nil versus all these other names that I've been, losing money in. I don't have a lot to say with LGF except they canceled their conference. I did this YouTube on Friday on them. And on Monday, I checked their website and they were supposed to be at the Goldman Sachs Cornucopia this week, and they pulled it from their website. So that obviously leads me to believe we're going to get get news there very soon. I would guess on Monday, some form next week. I didn't think it would happen before Thursday because Thursday was the day they were going to present. If it was going to happen before Thursday, you still go to the conference because you just want to talk about how great your deal was. So I'm not concerned it hasn't happened yet. I would think it happens Monday or sometime in the next 7 to 10 days. I can't stress enough how important it is to read and listen to, more importantly, listen to the last 3 or 4 times LGF has had conference calls. So I would listen to the actual conference calls in August and in May, but I would also listen to the conference presentation they gave last week and then the one they gave in June. That's on their website. And if you listen to the language that's even said back in June, there is the confidence has changed from May, June, fast forwarding to August and September. Okay. The things they said in the August conference call and last week about shareholders being, quote, very happy and reiterating over and over again how the goal was to build substantial shareholder value. Those things were not in the conference calls in May and February. They one time said the goal of the process is to generate shareholder value, but it didn't say that they're going to generate substantial shareholder value. It might seem nuanced, but it's not. They were much further along in that deal, in August. In fact, a board member has been buying stock regularly, and the last time he bought stock was June, and he hasn't bought any since, which leads me to believe they're restricted because they're very far towards the end of this deal. And if you look at some of the sell side, some of the part analyses of this business, I think they're getting it very, very wrong. So for instance, there is a sell sider that is using the value for the studio business at like $4 billion. And they're coming up with that based on what an independent evaluator did 2 years ago to value it. Okay. There's so many problems with that. MGM sold to Amazon after that at a much, much more comp premium to what LGF Studio is worth. And it's just academia having some independent evaluator. It's like when you get your home appraised. And that sometimes works fine if every home's exactly the same next to each other. But if you have a unique home, they usually just try to appraise it around whatever it's sold for. And at least there was a sale. So at least there's a real actual transaction that happened. Here it's just a guy, doing this. and trying to look there's no real comps for LGF and the studio business. So there's no real way to actually evaluate it. I think that $3 to $4 billion is way low. Okay. But more importantly, all the sell side has stars worth 2 billion or less. It's about 2 billion, 1.5 billion, whatever. If you go back to May, and the stock market was not good in May, there's been multiple articles saying that sources peg the value of stars at 2 to 4 billion. Okay. And it talks about DirecTV being a possible buyer, the private equity firm involved with them, TPG, I think. It talks about Roku being a possible buyer. It said Roku might not get it because they can't get to LGF's price point, which leads me to believe that somebody is bidding more. Since we know with almost certainty the star side gets the stake sold into it. We just don't know whether or not the studio also sells a stake in it. So how does this play out? So if the studio and stars each sell a stake, and let's say stars sells for 3 billion, there's like 225 million shares outstanding, something like that. So $1 billion is a lot. It's a big delta, 2 versus 3 billion on the stars, because there's so much debt. But if stars gets 3 billion, the midpoint of the 2 to 4, and the studio gets 5 or 6 or 7 billion, which is definitely possible, you're looking at the stock being worth over double what it's trading at today. And you have a clear event, which is the spinoff when it's going to happen, with the marks that are going to be announced about what those valuations are. And make no mistake about it, the people that are buying the stakes want to own the entire thing. They just can't for tax purposes. You can't buy one of the divisions right now while they're both together and have it be tax-free. It's exactly like NCR in that regard. So what they're going to do is they're going to spin off stars, and then day 2, the studio can be sold for a tax-free, because that's the parent company, RemainCo. Stars can't be sold for probably 2 years, but that doesn't matter because most of the value is in the studio. So if they get the studio sold within, months of the spin happening, most of your value will be created right away. And stars, of course, will be trading at a decent valuation too, because you'll know the mark is 3 billion or whatever it is. And the obvious path there is a sale. So what can go wrong with LGF? So the market's been a complete disaster, but in reality, it's not that bad, because the last conference they did was last week on Thursday, I think. And the market was not so great going into last Thursday, right? And the language the guy used on the call was rather definitive. He's a former investment banker. He's the vice chair of Lionsgate. I could try to pull it up for you if you want. I'll tell you what he said. I think I did this last time, but whatever, I'll do it again. It's really better if you guys do it on your own, just so you can see or even listen to it. And I want to be clear, I'm not buying this taking management's word that they're going to get a good price, though that is probably the crux of why I like it. I'm buying it because I do believe the sum of the two parts is worth a lot more than it's trading at. And I see the path to unlock it. If I didn't think that, then I wouldn't think that they're going to be able to sell the stakes in the businesses at the valuations I think they will. I think it works even if they sell a valuation in stars at 2 billion. Analysts are very skeptical they're going to be able to sell a stake at 2 billion. And the key there, if they sell stars at 2 billion, is to also sell a stake in the studio at a really good price. If they do both of those, stock goes up a lot. If they only sell a stake in stars at 2 billion or 1.5 billion or something, your downside is probably 10 to 15%. And even then, I don't think it's worth less than what it's trading at right now. It just might not be worth the double or 150% more than it's trading at. So ARBs exit. Hold on, let me find this. This is one of these names that's been going on for years. So to give you a little backstory, in 2016, Lionsgate bought Stars from John Malone and paid like $5 billion for it. And the pitch was that Stars plus the studio have synergies. They can take the studio shit and they can put it on Stars, and it's vertically integrated. Fast forward to today, 6 years later, the stock has been halved over the 6 years or worse, whatever it's done. And they're trying to split them off. So clearly they have come to the conclusion they've failed. They've literally failed as a business. And there is no going concern with LGF. And you have the largest shareholder, MHR, who has like half of his fund in this, literally half his fund. You can pull it up. He needs an exit. He's notoriously stingy and difficult to work with when it comes to selling companies. So your risk there is that he just won't take the bid that he's offered. But here they're just selling stakes. They're not selling the whole company. So I think he's going to be more inclined to take it. And I also don't think they would have said the language that they've said in August and yesterday if they weren't basically there on price. I believe all that's waiting now is just getting all of the structure in place. That they're way past that. And I'll tell you why I think that. I mean, I'll read you these lines, and you tell me if they would say these lines last week, ahead of an imminent announcement of the transaction. So the first question was, so Michael, you announced you're hoping to sell a stake in both the studio and Stars in November of 2021. It sounds like you'll know more about which strategic or financial partners might take a stake in the separate entities in the next few weeks. Why do you think the separation is right, given the rest of your peers are vertically integrated? I'm just going to, you know what, I'm not going to read all this. I'm just going to read you a few lines. So I can tell you that the deeper we've gotten in this over the last few months, the more convinced we are this is the right thing to do. So I think that John talked about the timetable in our last conference call, and I don't think that had any change in regard to that. He said September in the last conference call, right? We're now in the middle of September. This was like September 10th or something when they did this. We're going to dot our I's and cross our T's. We're not going to make a done deal on one or both. This is a typo on here. I forget what he actually says here. But we're very encouraged with our potential partner. We're not going to make a dumb deal. It's a typo on the transcript. We're not going to make a dumb deal on one or both sides of the business, but we're very encouraged with our potential partners, which in some cases are world-renowned smart money and also very smart strategic. Again, I don't know why you say that now if you're about to announce to the street no deal or a shitty deal, right? It doesn't make any sense. You only can lie for so long. The truth's going to come out in 10 days. This one I like too. It goes, a follow-up. I mean, you said in your last earnings call the conversations with financial strategic players were progressing towards a stake in Stars, but also as well as a stake in the separated studio. I mean, are you surprised at how these conversations have evolved over time? No, not really. I think we have, as I said, the deeper we dig into it, there are a lot of nuances that we have to maintain, which is obviously NOLs on both sides of the business. Obviously, you know that our parent company is Canadian, domiciled out of Vancouver. So you have to be very diligent in how we do that separation. Am I surprised? No. I think we're going to be very happy, and I think our shareholders are going to be very happy with the outcome. I mean, this stock was trading at $15 back in November when they announced this, the spin, and it's now 10 or 9. I don't know how you talk about shareholders being very happy with something. This guy's a former investment banker, and this is not rocket science. There's two parts of a business. They're going to sell a stake in one or both. They know what their current enterprise value is in the combined company. They can't sell a stake in one or both that's not way above the enterprise value in the current company and think shareholders are going to be very happy, or that they're going to create significant shareholder value. It's just facts. I think that's it from here. This transaction, you'll raise money and you'll delever, which is obviously a nice positive. But when you think about the benefit you might get from having a partner invest in the business, what factors go into your decision of which partners you want to align with? The short answer is we don't want to be in business with anyone either side of the business that we don't think will add real value. That's all bullshit. It could be really smart money, world-renowned smart money, and over somebody that knows the business. It's also smart money. And then the other side, strategic. Strategic in the world of Stars would be Stars has got a big international presence. And obviously there are aspirations for Stars on the global side and also across the ocean where others are looking to increase their footprint. And obviously, the United States is a big market. He basically just told you they're probably going to sell a stake in Stars to someone that's big internationally, a strategic partner internationally. Why would he tell you in this conference that the ideal partner for Stars would be someone strategic internationally if, a week from now or 2 weeks from now, they're not going to announce that someone strategic internationally bought a piece of it? It makes no sense to me. I think that's the end of this that I think is interesting. The much better, this just solidified to me that it's still there. Everything's still fine. But the real thing that got me excited was the conference call in August. That's when I started buying. And I encourage you to read that and more importantly, listen to it. And there was one thing that I thought was really interesting in that conference call. I can't remember if it was in that conference call or if it was, I'm going to pull up my notes here. Hold on one second. There was something I thought was really interesting. I'm trying to find it here. I'm almost there. Hold on one second. This paragraph I really liked too from the August. I'm going to tell you one thing that I thought I found that was interesting, but this is separate. In the August conference call, this is what the CEO says. In terms of our strategic planning, I would say the ultimate plan is to value both stars and the studio sides of our business separately. It remains the same goal. I think to add to that, as you can imagine, there are a number of ways to do this, and actually numerous complexities in order to make sure that the sum of the two parts, when they are valued separately, is significantly more than they are currently valued together. In terms of timing, I'd say my comments today reflect that we've said before in the subject. I mean, that's the whole thing there, right? It's not rocket science. They know that they have to come out with a press release that says that the two parts together are worth a lot more than it's currently trading at. Now I want to find you what I noticed. Almost there, I promise. I'm scrolling through my notes with somebody else. Yeah, here we go. Found it. If you listen to the conference call on August 8th, he stutters over the word months when he says the deeper we have gotten into this over the last few months, the more convinced we are. And it's my belief that that shows you that something came together in the 4 weeks before August 8th. And that's why they were so confident on the August 8th conference call about the significant shareholder value they're going to create. And listen to it. He definitely is about to say the over the last month, over the last, and he goes few months, the more convinced we are. So anyway, that's my pitch on stars. I think it's like 10% down, maybe 15% down, and like 50% up now, or 100% up even, depending on what the marks are. But I don't think it's going to do that in day one, the 50 or 100%. But if I think even it's a 20% pop, that's possible versus the 10 or 15% down, and I think there's, a 90% chance of that happening, I want to be big in it. The other thing that you should be aware of is that the comps, there's no good comp for this because like Paramount Plus and WBD, they're not, first of all, they're much bigger companies, but they're not at all the same mix or that similar to the studio mix and the stars business here. Those stocks have been decimated over the last year. So, there's been value destruction across the industry, which makes it harder to know what the valuation of stars and the studio could be today. So that would be my biggest, my most cautious point with this idea. But come August and last week, all of that was known. And that's what ultimately gives me a lot of confidence in it. I think that's pretty much it, guys. Any other questions on Lionsgate? Oh, there's two Lionsgate stock, LGFA and LGFB. I own mostly the B. The A trades at a 5% or 6% premium. I think they're both fine for trading vehicles because they're going to keep the premium in the short term. The risk is that if they sell the whole company, there might be no premium associated with the voting stock. Management mostly owns B, and the largest guy owns a mix of A and B with a little more A. But management's aligned in the board with the A and the B being treated equally. So I prefer B to A. All right. That's it. I'm telling you, one day we'll actually have something good happen in this portfolio. No, I guess I've had some good things happen. AMLX happened. Biotech's been good for me this year, except for SGEN. Have a great weekend to you as well. I'm seeing Jerry Seinfeld tonight, and I'm seeing Wilco tomorrow. So I have some great social things planned, very well needed, with this debacle of the stock market. And I wish everybody the best of luck. And yeah, I hope we get this LGF news Monday. It has to be coming. We have to be there. I just don't see how that would get derailed based on the market this week. It's been going on for many months, and it's just a stake. And people that are buying Stars or the studio are taking a decade, 20-year view, right? So I don't see that being derailed by this market, but you have to mention it as a risk based on what's going on. All right, everybody, take care. Good luck.